I did attend BNEF's Barrel of Tomorrow Forum in Houston. Now, it was all about energy transition, technology, and innovation. It does dovetail the SEC conversation with the Excel conversation. And in that, I caught up with Rubicon Carbon CEO Tom Montag, and he told me his company aims to be the, quote, the BlackRock of carbon credits. So basically, if you're a company, you can go to him and buy a suite of carbon credits. And I asked him about the importance of this voluntary carbon offset market.
I'll tell you a story that I read in the paper, and I assume it's true because I read it in the paper, and was about Lego. And Lego had been trying to fix their bricks so they didn't have a carbon footprint. And they did all this work around it, and they couldn't get them right, and they thought they had the right thing. And they tried 200 different types of materials, and they were using recycled, and then they realized the recycling and all that was using actually more carbon than that, and they just were going back to the brick. And I use that analogy because it's a toy company, and they make something that kids love, and I even use, but they just can't find the way to make it that way. But they're willing to invest the money and the time. And if your journey takes you someplace where it feels impossible to make that, it'd be great if you could offset what you are doing if your in-setting process doesn't get you there. And I think most companies would tell you that they don't think their in-setting properties get them there eventually. Even today on the panel, one of the participants said, we feel we're going to need to have offsets in 10 years or something like that. We have plenty to do now, but to really get there, we're going to need offsets to finish the journey. And
that's what I think is so interesting about Rubicon is you have all of it, right? You have the Wall Street investment experience, then you have a trading part, and then there's a scientist part. Having them all together, like that's what you're trying to create, like a measurable, liquid, legit voluntary carbon market.
Yes.
How hard is that?
Hard.
Hard. Okay, what's the hardest part?
Well, the hard part is that there's been so much about it that saying how the bad things about it, and it's like saying if somebody always was looking at, oh, this stock's bad, that stock's bad, people wouldn't like the stock market so much, as opposed to saying, oh, this stock's good, that stock's good, this stock is good. And so there's just been this narrative around a market that, by the way, is confusing, because if you look at the name of a project, you don't know what it is, you don't know exactly who approved that when, what standards it was under at what time, does anybody really audit it? And so it is a voluntary market that hasn't matured yet to the point of a financial market would mature. So it's difficult because people don't want to get caught up in something that turned out to be not so good.
And that brings to like two parts. One is you got to have the supply of the stuff, and then you got to have the buyers of the stuff. Let's go to the buyers first. Who's buying these carbon offsets today, and how do you expand that?
Well, we're trying to expand it. And we try to expand it by giving them a diversified portfolio from a credible source, which is us, that owns these things, with a science team that looks at them and opines on the credibility of those. And we also offer a risk adjustment process. So we say, well, listen, all these projects have some leakage or something that doesn't make them be 100, most of them. And so it might be 1%, but it might be a lot, as you'd see in the Guardian article. So the idea, if you want a risk adjustment, our science team will risk adjust it. So we believe we're selling you a ton as a ton.
So you do Wall Street stuff with
we
the
do Wall Street.
market.
Yeah, it was one of the first thing I brought up was like, we should do risk adjustment. It was like kind of securitization. Like
the scientists are like, what?
Well, yeah, the scientists said this is not good. Oh, this project, we don't think it's so good. I go, well, what do you mean by not good? And let's just say, let's say they said, oh, I think it's 80% of what they said. I go, oh, because in Wall Street, there'll be a bond that might be, it's supposed to be 100, it's at 80, but people are buying it because they think the 80 actually could be 90. Like, so there's still value there. It might not be the 100, but there's value there. And we need to see all the value in these things and support them so they can achieve whatever value they can. And so that's how we came up with the risk adjustment.
What kind of companies are buying the credits right now?
Well, you see most of them in the press. You see mostly, well, not a lot. So if you look at it in the market last year, if you look at retirements in America, just the public retirements of offsets, 90% of them were done by 80 companies. Now there was thousands of companies that did small amounts, but real volume was in the United States. And again, this is private. People do retire privately and publicly. Privately, we don't really know. Publicly, we do know. And that's like 90 to 100 companies. And you know some of them by just in the press.
So it's like oil and gas companies and tech companies, right? I mean, at the end of the day,
and some service companies.
It's basically high margin companies, right? That can afford to do that.
Yes.
How do you get lower margin companies like a chemical company or a refiner or something that needs to do it,
right,
but they can't afford it?
Right. Well, you have to you try to develop good projects.
Okay.
that meet their price point. You know, the Bloomberg NEF, who's where we are now, does a lot of great research on the emissions of companies and the margins of those companies. And a lot of the big emitters are in very low margin businesses. So they can't afford to do these very expensive carbon removal projects. And so we're trying to work with them and develop projects that they can do that meet their qualifications. And it takes some time.
That was my interview with Tom Montag, Rubicon Carbon Services CEO. Romain, what's so interesting, not only is this is the second career for the Wall Street guy, Tom Montag, is voluntary carbon credits, number one.
Yeah.
Number two, credits are a really dirty word in the industry, no pun intended. There's a verification issue, there's can you really trust them? There's lots of different problems, and he's genuinely trying to use Wall Street to fix that.
I mean, I'm always really down for any sort of financialization that sort of creates incentives to sort of address a lot of the social issues like climate change. But it raises the question, are these credits, are they having a meaningful impact?
And I think that that's what the science team is desperately trying to do. And I found it interesting because he was like, well, you can take a project, maybe 80% of it's good and 20% is bad. Why throw out the whole thing? Can't we just basically securitize it? Which is something that hasn't been done before within the market.
Yeah.
And again, a lot of companies won't go anywhere near carbon offsets because of that exact issue.
Yeah.
And there's no transparency with the price. So getting a price together is very tricky.
Oh gosh, yeah. I remember we were supposed to have that transparency. There was supposed to be a whole market that would be there and we could all just like we look on our Bloomberg terminals and see all the prices, and that never really materialized.
I think in theory.
And I feel like that was intentional.
Like 80 years ago, I mean, fast forward 80 years ago, you and I won't be here, but someone else will be. Maybe there will be a function on the terminal, but it's very hard to come to a price otherwise. He's very horrified that he won't be anchoring in 80 years.
Do you know something I don't?
Is that awkward?
Oh,
I'm so sorry.
I guess I've been watching.
We'll be robots.
I've been watching too many sci-fi movies. I thought I could just freeze my head and I could come back and haunt everyone 100 years from now.
We'll be
AI. All right.